The smartest thing to do in trading is to leave pending orders at the confluence of support in context of uptrend or at the confluence of resistance in context of downtrend. That's where we're supposed to buy and sell anyway. We buy at support and we sell at resistance. And the smartest thing to do is to leave pending orders with a stop loss and take profit to have a better life, to have a life. All right. The more mental and physical capital we save, the more financially capital will improve now and future, in the future and now. It's a big lesson. A reminder just happened a couple days, Thursday night, two nights ago. We needed to leave. We should have left the stop pending order to buy in context of uptrend after a pullback, just kind of very steep and vicious pullback. But the level stands. The buyers are leaving, the big buyers, the big money and smart money, leaving the buy orders. If it's uptrend, they're leaving the buy orders at support, and supports means moving averages and previous high low. Many times the trend line where it broke, and that's it. That's all I'm gonna use as a. That's it. That's what works for me, and obviously works. So the idea is very simple. Identify the trend in 4 hour and daily. So what's going on in 4 hour? It's been uptrend. Let's just look at 4 hour chart of pound yen. It's been uptrend, and then it came at some area of resistance. That's whatever the resistance was there on daily or weekly as a technical area. Came down. This was very dramatic, and mostly put a lot of people on some traders, pattern traders, candle pattern traders on the short side. But anyway, the point of this video is to always remember to identify and place the pending orders. Identify the conditions, the patterns, the trend, the context, and leave a pending order at support or resistance at moving averages, previous high low, possibly channel trend lines, in order for the possibility of U-turn at moving averages, and combining it with combination of previous high low. That's it. This pound yen, as it was up, came down to, it didn't close below red 200 here. The 200, it did close, but it made a U-turn at 200. Okay, that's a big sign of downtrend is not guaranteed. It's either neutral or uptrend. Came and retested in between whatever. The idea is if whatever happened here and if whatever a trader did here, doesn't matter. Once the traders see, after all rinse and repeat, there is a rejection of 200 and a U-turn at 200, a nice candle outside bar, strength. Buyers are strong. Buyers are taking charge. Buyers putting money, buying. Made a nice W. Sitting right here, it's automatically, let me just say, when we write here, not automatically, it's very likely that 100%, let's say 7 out of 10 times it's bullish, more bullish. But it's where to take the entry. Right here, possibly with a stop here, The stop always have to be here. You have to first determine the stop. The stop always have to be the point where the trend is changed, no longer valid. Bias change no longer valid. Right now we have a bias change W, the W and a reversal at support, and again retest and reversal at support 200. So that is okay. Very likely, reading the stories has further upside. Price, smart entry, low risk entry is when it's come down and then go back up at some level, at some support. Not sure. Yeah, we pretty much likely as a possibility is looking at 1 hour chart. We're looking to place pending order after it's here. Pending orders at the possible support, possible buy zone. Possible buy zone are this previous highs, give take 10 15 pips, 20 pips, 21, 34, 50 and 200. We can leave the orders at each one of them and a little bit bigger as it go further down. Bigger orders and the lower when it at the lower when it's lower at the bottom. Some an order at 21, bigger order at 34, bigger order at 50 and bigger order at 200. That works. And we're not talking about risking a lot. Total risk 2%. Let's take a 1% risk on total. All right, or a little more depending on your appetite or your income. All right, on your cash flow. So price came in 1 hour, and since it was not, I left let's just say we're talking about only the strategy where we leave pending orders at support in context of uptrend and vice versa. Support in context of the trend. Support and resistance in context of the trend. Tech levels in context of a trend. After, pullback retracement. So we left this orders. It picked up at 20. It picked up buy order at 34 and picked up buy order at 50 right here. In 1 hour chart we're talking about. Either way, when the price, let's just say, we were right here. Okay, when the price hit all that, the big picture idea, the bigger, smarter and big picture idea, smart money idea is to leave the orders, buy orders at 20, 34, 50 and 200. And there's some role reversal on the way on 4 hour chart in each level, mostly around 200 also and 50 also, previous high lows. So leave the orders there, and obviously some Fibonacci traders looking at it, but I don't think it's really important. What's important is leaving in moving averages in previous high low. That's it. And so the orders got picked up. The stop loss always gonna be the safest stop. This is good enough. No need to go as far as this. This stop is good enough. 190.44. Orders are in. Buy is in minus. Okay, 34 buy is in minus. 15 minus. 200. The smart money came in context of a uptrend of this 4 hour uptrend. 1 hour uptrend. Smart money came in. Okay. Another the homework we did is definitely dollar yen broke the previous 4 hour highs, and even previous daily high, recent daily high closed above. So yen crosses were gonna be very, very likely to be bullish, and it is now. It's last few days, and it's going to be next few days most likely. So we're gonna plan the pending orders on those Sunday night, tomorrow night when market opens. Right now it's just a reminder video. What must be done? What must be done is leaving pending orders when this trend is confirmed at pullback levels, pullback and U-turn levels. As we can see, price picked up at the last candle on this chart. Price picked up orders, bullish candle at 20, but we don't have to watch this. We don't have to watch any of this for hours or minutes. We don't have to spend no time on the screen. Just occasionally browse it at like morning time, or that's it. Definitely don't, I'm not gonna watch it between midnight to 8 a.m. Definitely not. No screen time at that time. That's a very, very not good at all. That's depleting your mental capital, which is directly the root of having financial capital. Like depleting is not gaining mental capital, and retaining mental capital is the root of financial capital, increasing financial capital. So we're not gonna watch it between midnight to 8 a.m. So this happened at 2 a.m. the last candle, as you can see on the chart. All right, this happened at 2 a.m. That's London 9 minus 7, 2 a.m. 7 minus 7, and MT4. And that's it. We don't need to watch any candles. We need to just leave a stop and take profit. And if you don't even watch it, like we didn't watch it for a few days. Okay? And just don't even worry about it. And leave it alone. Take profit in the previous high right here. Previous high. 194.90. And stop loss at the previous low. Whatever the price is right here at the previous swing and previous high. And leave and not watch. And have the guts and resolve and temperament and smart enough and wise. Have the rise above and beyond for the need to control or over manage or micromanage or just do anything, to mess with anything or stress or have no, like let's say if I had a 1 micro, would I be worried about it? Same concept for 10 lots when I can, or if I can. Story is, yeah, looking back, it worked. And what if it didn't work? What if the price right here will just come down, take stop out? That should be just fine. That's the reminder again. Having no negative emotions either way, and positive, just fine with the win, and terrible, definitely unworried and unafraid and unworried when it's a loss. Definitely no bad feeling when it's a loss. Never. Not 1%. And if it is there, as Wayne used to say, boot campers used to say, for 3 minutes and that's it, or maybe 30 seconds, I don't know, and move on. There'll be another great trade around the corner, another best idea around the corner, where price is gonna go to a support in context of uptrend and a moving average in a context of uptrend of 50 or 200 or 34 and 21, and turn around gives you hundreds of it. This was a 300 pip trade, by the way, wherever from 200 to the top. That's it. So 300 pip by just planning, pending orders, take profit orders, stop loss for sure orders, just planning a pending order at the tech levels, support in context, possible pullback and U-turn in context of trend. Simple. That's it. Ultimate. Where can price pull back and go back in a direction of the trend? Identifying, planning, doing, and leaving a pending order is going to be the smartest play. It is the smartest play. Let's not forget.